You're looking at the most dangerous number in financial history, 356 to 1. That is not a projection. That is not a conspiracy theory. As of right now, December 31st, 2025, there are 356 ounces of paper silver contracts for every single ounce of physical metal actually sitting in the COMEX vaults. The system is leveraged to the breaking point. But while that ratio is quietly destroying the futures market, something much louder just happened. At exactly 1:50 a.m. Eastern Standard Time on January 3rd, 2026, the United States military initiated the largest Latin American operation since the Cold War. We are talking about Operation Southern Spear. Delta Force operators penetrated Caracas. 7 explosions lit up the Venezuelan capital. And by 4:21 a.m., the world changed. President Donald Trump posted on Truth Social that Nicolás Maduro and his wife had been captured and flown out of the country. Now, here is the part that should terrify you. When a superpower decapitates a foreign government, the markets are supposed to panic. Oil should skyrocket. Gold should explode. The dollar should react. But look at the charts. The dollar index barely moved. Gold stayed flat. And silver, despite sitting on the most dangerous supply deficit in modern history, gained less than 3%. This is not normal market behavior. This is what we call pricing in the catastrophe. The markets didn't react because the smart money already knew. The COMEX vaults are telling us a story far more dangerous than the explosions in Caracas. Ladies and gentlemen, welcome to the Great Reset 2.0. Today, I'm going to open the ledger. I'm going to walk you through the minute-by-minute timeline of what actually happened in the early morning hours of January 3rd, 2026. Because the precision of this military strike perfectly matches the manipulation we are seeing in the global financial system. The fact that the financial markets did not crash tells you everything about how deeply this escalation was already embedded in the risk models of the global elite. To understand why your portfolio might be at zero by the end of 2026, we first need to look at the clock. Venezuela operates on VET time. New York operates on Eastern Standard Time. There is a 1-hour difference that explains the silence of the crash. When explosions started ripping through Caracas at 2:50 a.m. local time, it was exactly 1:50 a.m. in New York. The trading desks were open. The algorithms were watching. And what they did next exposes the biggest lie in the global economy. Let us look at the forensic reconstruction of this event using open source intelligence and Department of Defense leaks. We need to analyze the DXY reaction window starting exactly at 1:50 a.m. Eastern. Here is the operational sequence, minute by minute, and pay attention to how the global markets refuse to blink. At 1:50 a.m. New York time, the first explosions registered across the Caracas metropolitan area. At least 7 major detonations hit northern Venezuela. Residents near Fort Tiuna, the country's largest military installation, and the nerve center of their Ministry of Defense, reported power fluctuations and windows rattling. This wasn't random fire. This was the surgical removal of command and control networks. La Carlota Air Base was hit. The strategic signal antenna complex at Cerro El Volcan was struck to disrupt military communications. By 2:20 a.m. Eastern, the operational signature changed completely. We saw reports of low-flying helicopters identified by analysts as likely assets from the 160th Special Operations Aviation Regiment, the Night Stalkers. For those who track military history, this is the same unit that flew SEAL Team 6 into Abbottabad for the Bin Laden raid. When the 160th SOAR shows up, they aren't there for air superiority. They are there for high-value extraction. The strike operations concluded at 2:30 a.m. Eastern. The total engagement time was just 40 minutes. While the Venezuelan government was issuing emergency statements on Telegram condemning grave military aggression, Delta Force was already executing the primary objective on the ground. President Maduro declared a nationwide state of emergency, but it was already too late. Now, we get to the timeline that matters for your money. At 4:21 a.m. Eastern Standard Time, President Donald Trump posted on Truth Social confirming the mission was complete. He stated clearly that Nicolás Maduro and his wife had been captured and flown out of the country. This wasn't a threat. It was confirmation of a successful decapitation strike on a sitting head of state. Here is where the financial anomaly becomes impossible to ignore. By the time Trump was scheduled to hold his press conference at Mar-a-Lago later that morning, oil markets, currency markets, and precious metals markets had 9.5 hours to digest this news, 9.5 hours to panic. And what happened? The dollar index closed up barely 5 basis points. Gold, which had hit an all-time high in December 2025, traded flat. Silver gained less than 2.4%. Do the math with me. The United States just executed a regime change operation in an oil-rich nation, and the safe haven premium in the dollar and gold was functionally zero. This tells you one distinct thing. The markets had already priced in this escalation. The smart money knew this was coming, but what they are pricing in now is far more dangerous than a military coup. The real systemic risk isn't what happened in Caracas. It is the economic collapse that has been running silently for 8 months prior. To understand the coming crash, we have to look at the trade data that no one else is talking about. Let's look at the U.S. Census Bureau trade data, because this is where you see the policy escalation was baked into the numbers long before the first missile was fired. The U.S.-Venezuela bilateral trade through September 2025 totaled just over $5 billion. That represents a massive contraction from 2024 levels. We're talking about a 53% year-over-year drop in imports. The trade balance isn't just narrowing, the entire economic relationship was being systematically strangled. If you look at the monthly dynamics, you see the exact moment the war really started. It wasn't in January 2026, it was in Q3 of 2025. In July, imports plummeted to $30 million, the lowest monthly figure since 2020. This collapse correlates directly with two specific policy actions: the reimposition of comprehensive sanctions in May 2025 and the maritime interdiction campaign that escalated in August. But here is the geopolitical smoking gun that explains the timing of the strike. It's all about China. By November 2025, 80% of Venezuela's total oil exports were flowing directly to China. China was the lifeline keeping the Maduro regime afloat. On December 17, 2025, just weeks before the invasion, Trump designated the Maduro government as a foreign terrorist organization and ordered a total blockade of sanctioned oil tankers. The results were immediate and devastating. In just 30 days, China lost 80% of its Venezuelan crude supply. The blockade worked. Venezuelan crude production dropped by over 150,000 barrels per day in December alone. While Chevron was still operating under a special license to recover debt, the cash flow to the regime and the oil flow to Beijing was severed. This is the asymmetry that most analysts miss. Venezuela cannot export its heavy crude without U.S. blending agents. Under HS Code 27, mineral fuels, the U.S. historically exported light naphtha and diluents to Venezuela. These are required to blend their heavy sludge into something that can actually flow through a pipeline. By the time Delta Force hit the ground on January 3rd, the U.S. had already cut off these blending agents. The economic siege had been running for 8 months. So, when the news broke that the U.S. military had intervened, the markets didn't panic because the trade was already dead. The oil supply to the global market had already been priced out. But while the energy markets were asleep, a different beast was waking up. The markets have shifted their fear from oil to the only asset that reveals the true structural fragility of the financial system: silver. We are moving from a geopolitical event to a financial engineering time bomb that is ticking in the COMEX vaults right now. This is where the true systemic fragility is hiding, and it is far more critical than any military operation. As of year-end 2025, COMEX registered inventory, the metal actually available for immediate delivery, has crashed. It is down 70% from its peak, but the number that guarantees the coming financial reset is the leverage ratio. We are sitting at 356 to 1. That means for every single ounce of physical silver sitting in the vault, there are 356 paper claims owned by investors. This is a mathematically impossible structure. If just 1% of those contract holders stand for delivery and demand their physical metal, the COMEX breaks. The default would be instant. And to make matters worse, London lease rates have hit 11%, and the spot premium is $23 over futures. The physical market is screaming scarcity while the paper market pretends everything is fine. You have to layer the supply shock on top of this leverage. On January 1st, 2026, just 48 hours before the strikes in Caracas, China imposed strict licensing requirements on silver exports. China controls up to 70% of global refining capacity. They have effectively choked off the world's supply of refined silver exactly when industrial demand for solar panels and electric vehicles is consuming 50% of the market. We are in the 5th consecutive year of a structural supply deficit, missing over 230 million ounces annually. So, here's the conclusion of the ledger. Operation Southern Spear was a geopolitical event, executed flawlessly to secure energy dominance. But the silver delivery stress is a financial engineering time bomb. The muted market reaction on January 3rd wasn't stability, it was the calm before the delivery failure. The system is trying to hold the price down to prevent a panic, but the physical metal is gone. The 2008 crisis was about bad debt. The 2026 crisis will be about the unavailability of collateral. When the paper market breaks, wealth will not just transfer, it will evaporate for anyone holding digital promises instead of real assets. You need to know exactly which assets will survive the decoupling of paper and physical prices. I have broken down the specific investment strategy and the 3 assets that historically perform best during a currency delivery failure in this video right here on the screen. The algorithms are already suppressing this information, so click this video now to see the roadmap before the ratio collapses. I will see you there.